hope you guys have had an amazing week with your trades for week just gone. I hope you're able to make huge profits on your trades, right? And I also hope that by watching my content, I was able to help you or assist you in that journey of collecting those big profits. Now, with that said, if you do find the content useful, make sure you hit the subscribe button, turn on the notification, and drop us a like. And also as well, for this analysis video, not only are we going to be talking about the Nasdaq 100, we're also going to be talking about gold as well. And gold is what I've actually been trading for the past 3 weeks. Although for the past 3 weeks, I've been discussing Nasdaq 100 analysis with you. So if you are interested in how I have been doing business in regards to the gold, make sure you stick around to the end, and I'm sure you'll find it super rewarding. So with that covered, we're going to get straight into the business of the Nasdaq 100. We did have a few surprising moves that took place, and both of those moves were opportunities that you could have capitalized on had you noticed them. So the first thing that we're going to do in regards to the Nas that we can notice is that the weekly low was taken out on the Monday. So the previous week commencing the 17th, that low was taken out on the Monday, and this is it right here. Right? Now, you could have taken advantage of this situation. You would have needed to have gone into a lower time frame in order to fully seize that opportunity when it emerged. So let's go to a 15-minute. Okay, so we're now on the 15-minute chart, and as you can see, this is how it looked when price closed below that weekly low. Now, any sales you placed in this location when this happened would have been valid, but the best sell, right, the best sell that you could have taken would have been on this one right here, this candle right here. So let me just make this a bit bigger so you can see what I mean. This one would have been the best one to take after it closed. So this is what happened first. So you could have seen that and you could have jumped in, and you would have been in drawdown for a little bit. This would have been the best one to take, because that would have been a second confirmation that it is indeed going down. Okay, so if you're taking that one, kudos to you. If you took that one, kudos to you. Well, so long as your stop wasn't anywhere around this level, you'd have been fine, right? So price closed at that level, went all the way down, okay, and then at the end of that Monday, price began to push back up again, right? Now, when price began its journey back up to the upside, when it began that journey to push back up again, this was where we had to be careful, because the weekly low had been taken out. What most newbies would do in a situation like this is they will keep expanding their stop, because they believe price eventually is going to come down, and that there is super dangerous. I never recommend expanding the stop. Your first stop that you put in place based on the reasons why you did it, so long as it makes sense, you shouldn't expand it. So for example, let's just do a little bit of role playing right now, right? You put in your sell down here, right? You put your sell down here, okay? Because you believe price is going to go lower, and then you targeted the swing high of the Monday, right? Which would have been sensible. Okay, if you did nothing doing all of this move to the downside here, right, because you were expecting bigger gains, as price was pushing up to the upside, the worst thing you could have done would have been to expand your stop. And as you can see, had you have done that, that could have been you, right? So whenever you put in your trade and you've locked in your stop, and your stop is at a reasonable location, So basically it makes sense. You're using a swing high either of a 15-minute or 1 hour. Don't move it unless if you absolutely believe it's turning around and it's not going to go in the way that you expect it to go. Then you can jump out early, obviously saving yourself a little bit more, right? So that would have been the play in terms of how I would have done it once the weekly low was crossed. So those two moves, the second move, I would have taken that one and ridden it downwards, and then I would have come in with a trailing stop to secure all the gains I had made as the market began to progress. That's how I would have done it, right? So we're now going to jump back into the 1 hour. So we're in the 15-minute right now. We're going to go back into the 1 hour. So now that we are back in the 1 hour, you would notice that in the last video, I have extended this fair value gap further along, right? Now this fair value gap, we took it off the 4 hour chart or the 4 hour time frame. So if I go to the 4 hour, you begin to see what it is that I mean. So let's just zoom in right here. So this fair value gap was taken from this point to that point, and it was off the 4 hour. Now we go back to the 1 hour, and we can see that price came very close to it on the Monday and then on the Tuesday and moved away and violated the weekly low that was just taken out on the Monday. Okay, so in my opinion, that would have been a righteous position to start taking buys, right? And we can really see that this is where sellers jumped out by this all-encompassing sell move that we have right here. So this would have been sellers over here, right? Price is now pushed up because you've got buyers that have got in. This is the buyers right here. They're riding all the way up. They've realized that this level has been violated, so they're no longer interested in the game anymore. Hence why we can see it with this massive push to the downside. All of them dumped their positions and re-entered long on this level right here, right? And this weekly low will then later on become really important because market will then retrace back to it. So market came back to this weekly low right here and then moved away from it, right? So this is the moves that you could have made, right? So just off using weekly lows and weekly highs, you would have identified this area and this area as entries and another area over here as a possible entry, or even this area over here as a possible entry. But chances are you would not have got it dead on this level. You probably would have got it up here somewhere or maybe up here, depending on how it was done. So once again, either you would have got it over here or up here, right? If you were buying. If you took the sell, it didn't work out, right? And then also, you can also see that if within this move itself, we have a channel. So this is the channel in itself. So let me see if I can get this dead on. Right. Okay. So you would have noticed that as the weeks progress, okay, so especially once it came back down to this weekly low and it was bouncing off it, okay, you would have noticed that you was in a channel, okay, and that confirmation of the fair value gap, the bullish fair value gap that price didn't go into but is moving away from, could have reinforced that idea that maybe it would have been a good idea to jump in on the buy and ride it to the upside. Okay, so if you've been following this channel for any period of time, you would have known how to do all of this, how to spot all of these opportunities, and you would have made your gains, right? If you're new to this channel, welcome, and I hope you stick around for the long haul, right? Now, that's how that would have worked out. So moving forward for week commencing the 1st of July, this is going to be the new weekly low. So on the low, we're looking at 19480.5. If price closes below that level, also important how price closes below that level, we would be looking for positions in the corresponding direction, right? And up here we have the weekly high that was set on a Friday. And once again, if price closes above that level, depending on how it is done, we will be looking for positions in the corresponding direction. And that price point is 20037.1, right? So now we know what we need to do for week commencing the 1st of July. Let's take a look at gold to see what I did or what I have been doing with that, okay? So on gold, I've already been putting in all the moves that I've been making, so I'm just going to explain exactly what you're seeing and we'll take it from there. So the moves I made in this area over here, it worked out. It wasn't too great. It was kind of cool because I was trying to find myself in terms of what was happening, right? Now from this week onwards, so week commencing the 17th, I had a bit of an idea as to what I needed to look out for. I waited for the opportunities and then I jumped in, right? So first move that I spotted, that was on the Thursday, the 20th. And I could see that price had closed above the weekly high of that previous week. And looking at the move, sorry, my mouse is jumping around all over the place. So looking at the strength of move in terms of how price pushed above it. So what I did was I took a buy up here. And then I realized I've made a terrible mistake once I've taken that buy. Right, so I took a buy up here. Everything was fine. I held it overnight. And then as we got into the Friday, I realized that price was consolidating, right? So I know that when price starts to build up like this, I need to start protecting myself because it could definitely move against me. And what happened over the course of the Friday, market then dropped all the way back down. Soon as price took out this low over here, okay, I jumped back in again with a sell and I read it all the way down. So I did 2 trades that week, one on the Thursday, one on the Friday. The Thursday gave me small gains, but I was satisfied and comfortable with that, okay? And I was taken out by a trading stop with this move to the downside. Once that happened, I then joined the market again. I had a pending sell order just below this swing low. And the reason why I had that sell order there was because I believe price was going to break downwards, right? So I had a sell order, right below this level over here. So we'll just go into the 15-minute, so it makes a lot more sense. Where is it? Okay, yeah, that's it right here. Let's zoom in. So I had a sell order, right? So as soon as it closed right below, my sell order was, I would say, maybe about here somewhere, right? So I was triggered in nicely, and I also had a trading stop for that position that I had taken. So weekly high was taken out. That was it. Oh, I can move it. Okay, so weekly high, boom, boom, boom. This is the one I took, right? So I took this buy to the upside, and then as the day was going on and it was looking like it was gonna go bad, I had my trading stop and I was just moving it below the swing lows, right? So first I had the trading stop up here, then I moved the trading stop up here, then I moved the trading stop up here, then this move here took me out, right? And it was still consolidating because it took me out. It didn't continue downwards, it went back up again. So then I put in a pending sell order at this level right here, right? And then during the course of the day, when I what's the word I'm looking for? When I checked my phone just to see what was going on, I could see that I was already in a trade and price was moving downwards, right? So that was great. So I sat in that trade all the way to Friday. It went all the way down, and then I had gained a lot. There was no need for me to hold it over the weekend, so I just jumped out of this trade around here somewhere, right? So I jumped out of that. So that was really nice gains on for that week. And then this week just gone, because I'm in trades and I'm actually in one right now, so I'm holding that one over the weekend. It's looking a bit dicey in terms of how it looks, and I'm going to explain that, right? So last week just gone, meaning Monday the 24th, right? Monday came, I could see price was consolidating, right? So I didn't really do anything. And then the Tuesday, it looked like it was going to break down. So my plan was I was going to enter the sell below Friday's swing low, which would have been down here somewhere, right? But what happened was price came back again up to around this level. So it's kind of funny because on my MT5 platform where I actually trade off, right, there is some serious wicks on these candles that roughly come up to around this level up here, okay? But on this chart that I'm using, it doesn't show it. But however, this level up here, right, looked like a resistance to me. It looked like a resistance at the time. So I said to myself, if price moves off this resistance level, I'm then going to join the market with a sell. So I waited for price to go up. It came all the way down, right? And then even when it did that, I still didn't want to join in with the sell because I thought at this level, there was a high probability it's going to push up. So I waited for price to fly down and take out the liquidity at this level down here and then push back up again. And then I joined it right here. I joined it right here, and I had the top side here covered as my stop loss, right? And I sat in that for Thursday, and then I sat in that for Friday, right? And then it just did what it did, which was good. I ain't gonna lie, like I fully enjoyed that, right? Because in my opinion, I've spent many years learning this stuff. Like I'm not gonna lie, like this thing, it didn't happen overnight. It did not happen overnight. I promise you, it did not happen overnight. I've been doing this for a hot minute, and it's only, say, last year and a half that I've started to really begin to see that, okay, maybe I am the guy, right? So I rolled it all the way down. So I've got in at this level selling. I rolled it all the way down, okay? And then on the Thursday, right, price is pushing. And then I started to see prices pushing up on the Thursday. So on the Thursday, I'm heading into work. I'm heading into the office. I'm on my way. I'm looking at my phone and I'm seeing the prices beginning to push up. So what I did was I just moved my trailing stop to about this level because I got in here. I'm comfortable with the fact that I've been able to achieve. So I've won. I haven't lost. I've covered all expenses, overnight fees, etc. So I was taken out via trailing stop at this level over here, which was fine. So then I left it for the whole of the Friday. I didn't do anything. I just let it be what it was, right? So then as obviously the day progressed, we got into the Friday, which is over here. And then I could see how everything was looking. And I said to myself, you know what? It makes sense. I saw an all-encompassing push to the upside. So I joined it with a buy up here. And now I'm kind of sitting in break even over the weekend. So worst case scenario, this whole situation here turns out to be a head and shoulders, right? If you're unsure of what a head and shoulders looks like, this is it, right? This is it. And then it breaks all the way down. So if price comes back into this zone over here, and I'm buying, by the way, so I'm long, right? If it comes back up to this position up here, I am immediately bringing in a trailing stop and I'm locking in what it is that I've gained. If the trailing stop is not large enough to make me profitable, I will make sure it is large enough, at least I recoup my overnight fees, right, over that I've incurred over the weekend. Okay, and then what I will then do, if it does indeed want to go up, I will rejoin the market again once it closes the weekly high, which would be 2340.04, right? But before it even gets to 2319.0, I'll be out because my trading stop will be locked in. So the worst case scenario that I'm expecting right now is that market opens in the next 3 hours and gaps down, at which point obviously this whole thing here would have been a disaster. So I'm hoping that it continues to push up. I can bring in my trading stop and at least at the bare minimum secure my fees for the overnight fees, right? Secure that. So at least if I get that in, then I'm good, right? So in a nutshell, I am really enjoying trading gold right now. Like, I kid you not, I have struggled with this one particular asset for a very, very long time. And it feels like I'm now beginning to understand how to move in the gold market. And the only way I was actually able to do that was reading the books. The books in questions are in the description of this video. So you just go hit the link, go check them out, see if they make sense. If it does, pick it up. If it doesn't, then obviously it doesn't. Was the books and obviously the strategy that I use of weekly lows and weekly highs. This is what is helping me the most in navigating gold, because I've been doing it for so long on the Nas. I actually know what to look out for in terms of key things I need to look out for when placing my trades. So sometimes I can actually get in earlier before the weekly low is taken out, or sometimes I just have to wait for the weekly low to be taken out or the weekly high to be taken out before I get in. But bottom line is, I'm really happy with how I'm working on gold at the moment, and I think I'm going to be trading that for a fair bit. Now, my question to you guys is this, right? I don't think it's right, in my opinion, that I'm telling you how to navigate Nasdaq100, which I'm not trading right now, by the way, when I'm actually trading gold. I'll prefer I'm showing you what I'm actually trading. So with that in mind, I would like to ask you guys to, in the comment section, let me know. So last time I asked this question, one person was kind enough to share their thoughts, right? I hope more of you will share your thoughts. So do you think I should keep it on gold, exclusively on gold because I'm actually trading gold? Or would you like me just to talk about gold like how I am now, and also add in NAS as well, bearing in mind I am not trading NAS, right? So I'm going to leave that to you. And also as well, you're going to see at the end of this video, you're going to have two thumbs. One for backtesting, which is a playlist of backtesting videos. I think very useful, definitely could help you become profitable, right? Obviously it still needs work. It's not do this all the time and you're going to win every single time. No, right? But it could help you, right? Or you could watch the previous video of last week, so at least you're able to follow along in regards to what we're talking about. So I'm going to leave all of that in your capable hands, and I'm going to say thank you for coming over to watch another episode, right? And I look forward to seeing you in the next video, which will be very, very soon. So for now, this is Pips and Points signing out.